Hey everybody. Hey Michael. Hey Beth. Hey Arturo. Workman Smith. Dan. Hey everybody. Glad to have you. Time to be cautious, alright? Don't get FOMO. Don't think like we're gonna second guess. Like, hey, be freaking careful, please. Please, 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 please. I don't want to hear about you coming in here in the next couple weeks telling me you took a big loss because you didn't expect a pullback. Please, for the love of all that's, for your money, for your family, please, if you have something you're up really big in, at least put in some kind of stop order or, protect yourself, buy some, potentially buy some VIX or some downside put protection, do a debit spread on S&P 500. I mean, volatility is likely coming. We got a little taste of it yesterday. That's just we may squiggle back higher. Everybody, I'm starting to see a lot of headlines that we may that people are thinking that when we break over the 618 retrace of the S&P 500, that we're definitely going to all-time highs. I don't think that's the case. I think it's going to be a big suck in, and then we're going to rip everybody, and then we'll go up. So please, please, please be strategic. If you're in a position that you can book profits now, reevaluate when we dip, and reposition yourself in a better spot than you are right now. Just think about it, okay? Control your risk, please. This is you don't usually get this kind of update from me, so please be careful. Right now is very, very, very dangerous. We're so close to a fake breakout. It's going to look like a breakout, and then we're going to rip everybody. I've seen this play out many times before, so please be careful. Hey, Valerie. Hey, Patrick, Sledge, Andreas. Hey, everybody. If you want to chat with me, make sure you're a subscriber. That's the only requirement. A few seconds later, you'll be able to chat while we're live. If you're watching this later, leave a comment. Somebody left a comment on I guess it was the Tuesday video. I answered that this morning. Just make sure that you contact me or follow somebody that knows what they're doing. At the very minimum, if you're here, I do my best to try to help you get ahead in the markets. Unfortunately, a lot of other people out there just want your money, just want your views, just want whatever. I actually want to help you. So please, please, please. Hey, Goose. Hey, Michael. Hey, Francois. Hey, David. Morning, everybody. Remember, all trading involves a substantial risk of loss. And that's what I'm really talking about this morning is that right now we're at a turning point in the market. It looks like we're going to break out. I'm pretty sure we're going to get a retrace. I'm pretty sure we're going to get volatility. Historically, June volatility spikes. Please be careful. Past performance, though, is not necessarily indicative of what's going to happen, so future results. This presentation here is intended to be informational, educational, and fun. Hope you have fun. If not, just let me know. It's not a recommendation to buy or sell any financial instrument. I mean, anything I talked about, just close all your positions and sit on cash. That's a wise idea. And if you desire personal financial advice, hire and consult a financial advisor who has a fiduciary duty to give you advice based on your financial situation. Although it's been my experience that most financial advisors just want your money too. Nobody's going to watch out for your money like you do. Look, nobody's going to watch out for your money like you do. All right? You are the only person that cares about your money. If you think anybody out there, if you think, oh, I hired this guy, he's going to take care of my money, I'm telling you right now, it's full of crap. That's a fool's errand right there. You are the only one that takes care of your money. You're the only. Nobody cares about you more than you. And if you don't care about you, I don't know if I can help you. We get one shot at this thing right here, life, and you got to be the one watching out for number one. That's you. All right. And we all watch out for our kids. We all watch out for other family, but nobody watches out for you more than you. All right. Nobody has a vested interest in your survival, your well-being, more than you do. All right? I don't care who you're leading, whatever you're doing. You got to watch out for number one. You got to take care of you. All right, moving on. S&P 500. You know, got all sorts of alerts and stuff here. What we're talking about, this 618 level. There's a lot of stuff out there thinking that when we break above this 618 level right here, and it, you know, depending on how you do it, this is just a simplified chart. It comes in at 43.31. If you do it off the high to low, it comes in like 43.11. I've started seeing stories. I've started seeing, you know, mainstream media even talking about when we break over 43.11, it's a lock. We're running to an all-time new high. Please, for the love of all that's trading, be careful. All right. The likely path, the likely thing, the most likely high probability thing that we do when we spike up above this level right here. And look, I mean, this level's been a level since before we even topped. It was a level of support. It was a level of resistance in here. This level that we're coming up on has been an important level since before we even knew it was an important level. Right here, we're highly likely to get a reaction, a pullback. It's going to freak a lot of people out. All right. We have hugely volatile events and news and economic stuff coming out next week. We have CPI, PPI, consumer sentiment, options expiration, FOMC meeting, a potential rate change up or down, or maybe just sideways. I'm not going to speculate. Right now, it's looking like we might actually get a rate raise. Wouldn't that be crazy? That is the hazard in the markets right now. All right. Please be careful. Please, please, please. That's my soapbox for the morning. Hope you hear me. Hope you take action. Don't just sit on your hands. This thing can be dangerous. All right. Let's go ahead and look at the finer grained chart here. ES just stuck churning. So this is likely, the way this is acting, we're likely going to see a spike right up to the top, potentially poking up through, and then quite literally we could see this slam back down. I mean, look, 4 days right there. We saw giant moves down. You're thinking, JT, it can't be that bad. Look, I mean, that was 141 points in 4 days right there. 141 points. If we spike up here in the next couple of days, even early next week, we could come right back down to here, and could be a 6% move back to the roadmap line, and it could be an even bigger move down to the 618 retrace, back down here. Could be a 12% retrace. Talking 500 points. Ouch. Are you prepared for some kind of 500-point move? We could do 150 points in like 4 days. No problem. I mean, look at this. We've done this, 1, 2, 3, 4, 5 days, top to bottom right there. 5 days down. 1, 2, 3, 4, 5 days, 6 days right there. And look at some of these. Don't think just because we're, everything seems like it's calm, it's chill, VIX is at the lowest levels we've seen, we're not going to get volatility. No, that's when we expand volatility. All right. VIX doesn't hang out at the bottom. If you're not sure what I'm talking about, VIX right here. Look over here. We're bottoming out. We haven't been this low on VIX since back here in 2020, before COVID. We did get a little spike down in June of 21, but we haven't really been below this level since back here before COVID. Now, is everything hunky-dory, all calm in the world like we were before COVID? I don't think so. Lots of potential news, gut-wrenching stuff. More banks can blow up, especially if we do a rate raise. Please, please, please be careful with where you are. All right. Now, yesterday we had a lot of discussion about how to play something like this. And, something like UVXY and SVXY, all the leveraged things, They're all based on a daily basis, just the move for a day, not even over multiple days. But let's say we had VIX spike back up to 25. That's 70. Let's see, right at 25. There's like 78% move. All right. So let me pop up a calculator right here. Pull it over. 78% move. If you were on something like UVXY, that would be 3 times leverage, roughly 234%. So we'd be looking for a 234% move on UVXY. Pop that up, UVXY. Run the 234% move. 234. Had to, yeah, got that really close. Look at that, 234. Ha! Right there. So it'd be a move up to 7. We're talking about 2 to 7. That's not a huge opportunity. Even if you bought like $4 options, I mean, you're not going, we're not taking this baby up to 80 or something like that right now. Now, SVXY, look at that, coming up there to the targets, a potential reversal zone. We could get a 15 to 20% pullback, just like we've seen over and over. So maybe a wiser play might be on something that can move upwards of 15, 20, 30 points. All right. If you need something to move, check it out. Now, the options are higher price. I went down here, bought some options down in this zone, relatively affordable. And if we continue on the drop down to maybe 63, that could be like $10 in the money. Take your dollar risk and turn it to 10. I mean, 10 to 1. That's my kind of payout. Something like UVXY. Even if you're buying at the money, you're only 3 times your money, roughly. All right. Even if it cost you pennies on the dollar, you'd have to buy a crap ton of them to make any kind of money on a $5 move. Just think about it, all right? Think about your opportunity, opportunity costs when you do these things. I do that all the time on options. Hey, Kimberly, morning. So, Deb, morning. David, morning. Michael, morning, everybody. And like I said, if you want to chat with me, just have to be a subscriber. And while you're at it, you might as well hit the alert button to get notified on all the alerts if YouTube wants you to. If you watch content similar to this, then it'll probably give you a notification. If you don't watch content similar to this, then you might not see the notification. But I go live every morning talking about what's moving for the day, and we're about to get on into the list here. So if you're unfamiliar, ES is the S&P 500 futures. NQ is the NASDAQ futures. We're talking about SPY, QQQ for ETFs that you may be familiar with. Russell here, RTY, just went through a rebalancing. It's annual rebalancing, and the ticker for that one, the ETF, IWM. All right. So we're looking for NQ to potentially roll on over. I mean, this arrow has been sitting here for a few days. We're highly likely to come all the way back down into this 13.3 area, back down in here. Maybe even hit the roadmap line, although the roadmap line may come up and meet us up in here somewhere by the time we retrace. Could be over here. Please be careful. Russell here. As I said, this is getting, we've had a little resistance here, then getting a little pullback. May see a little trouble getting up through that zone. Get above that, we can catch back up to 2,000 pretty quickly. Would I count on it? No, we could easily roll over and make a lower low. This is a treacherous spot right now. This has done a little retrace right there to a 618 level, and it's holding. This is the point where it can roll over and go lower. All right, just because my fibs weren't on the chart doesn't mean it's not possible. But right there, that can roll over and go lower. And at this point, that move could take us down to 1650, possibly even 1581. All right, if you're like, well, JT, you said IWM, and IWM's prices don't even look like that. Well, just knock a decimal point off, basically. It's the same, look, same 618 right there. very close. Get my fibs right. Same 618, getting a little reaction. This thing can entirely possible we see this roll down to 162. Possibly even 155. Not perfectly knock a decimal off, but pretty close, ballpark. All right. They do have management factors and all that stuff in the ETFs over the futures. And futures contracts do expire, and they have some premium built in. It's a whole convoluted thing. Oil continues to kind of try to break out here. I've been beating the drum on this a couple days. This is my target right up in here. Then we're going to find some resistance at the roadmap line when we get there. Excuse me. That strawberry daiquiri flavored monster kind of talking back to me just a little bit. So right up there, that's my target. Can just take a few days. Look, I mean, look at that monster. Monster moves before. Oil is a volatile mistress right there. We've kind of had some low volatility period here. I would expect some big moves. We've kind of been churning here in a relatively tight spot. We can get some nice big pop. All right. We do have resistance right up here. We'll probably go hit that again. Spin the top, spin the top, spin the top, spin the top. Probably go test that one more time. GC, still churning. Looks like it wants to get one more spike down to that roadmap line. That would be the best thing to clear up the pattern. I mean, if we start breaking out higher now, it gives me caution. And that 618 level is still right up here, 2029. That's still significant resistance just above my consolidation zone that we couldn't break into right here a couple days ago. Bitcoin, this one, I got to jump down on a time frame and show you something. Gotta show you something. We got that big spike down on all that Binance junk, right? Then Coinbase yesterday making a potential marginal lower low here. Look what we did. We rallied strongly, came back, 618. This is a measured bounce type setup. We're getting held in by the roadmap line here. We break above this stuff, possibly up in the 26,800 area, above this little high right here. Maybe I need to zoom it up a little bit. This little high we made right here. Need to clear that. It's like one of the first indications. We need to clear this one too. There's like a resistance zone built up in here where we kind of topped a couple times. Get up through that stuff. This thing has a nice potential to move on up. Very, very nice. This is one of those patterns I get super excited about because it has huge potential to move. Talking right back up into this 29,000 area. A pullback back to this 28.9 area. No, 28.3, 28.4. So move up like this. Potential to go boom like this. Right back down like this. And then we get the final move up into that 32,000 potential area right up in here. Move basically similar to this move off that last move. Why 32? Because that's where the resistance is up there. So yeah, right up in there, 30, 31, 32. Right up in that zone. Could stall out at 30. Could. Very well could. Gotta zoom this back up so we can see. I know there's a lot of stuff drawn on this chart. There's a lot of stuff going on. We could stall out right at that prior high, but we could go up and hit that extension at 32.7. There's a bullish potential, but it needs to follow through. All right, I'm super excited about this pattern right now. If it can get the follow through, we need the follow through at this point. Ethereum, not really doing a whole lot. This one kind of just not quite as strong on the pattern. So be careful there. We're back in the consolidation box. If this one can break out above these highs that we've had for the last couple weeks, was, well, just a few days, I guess. Back to May 30th, what, a week and a half. If we can break above that, we can see an extension. But Ethereum is farther along in its pattern than Bitcoin. So they are not the same, even though they look similar. Ethereum bottomed out way back in the summer. Way back here in June last summer, almost a year ago. Whereas Bitcoin didn't bottom out until here in November. So running several months apart. DXY, rolling over potentially. If we break back down below these lows we've had the last couple of days, probably going to push back to the lows here. And maybe see that extension down to some of my targets finally. GME, I warned you. Getting slammed right back down. Probably going lower. That was a lower high. Probably going lower low. BAOS. Baoshang. I don't know. My East Tennessee does not speak that. This is dangerous and volatile. That was a spike, and as spikes go, it retraced right back to where the resting place was, and spiking again. No matter how high it goes, it's likely to come right back down here again. QS, that looks like a garbage chart. And VS, that's a biotech, dangerous, be careful. SIG, ouch. Beating on the top, beating on the bottom, must have said something that the people didn't like. That's be careful on that. Doesn't have to go anywhere. That's a 618. If we can hold there, can be bullish, but that's not a very bullish pattern leading up into that. That looks more corrective, and we could see an extension down to 38. BBLG doing wow. Talk about a reverse split. 1 for 30. Ouch. And still, that's going to be bearish and probably going to go lower. Probably going to go lower. REVG, Rev Group. That just looks a volatile, choppy mess right there. That's not bullish. That's not anything. We're still a lower high. Probably going to retrace that. ADBE. This one has potential to come up here and retest this prior high. Get above that, then things can start looking more positive for Adobe. Got a ways to go to catch up, and that is the August high right there. So it is lagging slightly over QQQ. Not hugely, not like Amazon is. Amazon way lagging the August high. Bigger potential, about 15%. Now it's even bigger because it dropped more. 20% upside there just to catch up to the August high. PRGO. Oh, that reminds me. I did bring one thing to talk about. Let me see if I can find it real quick. Where? Oh, where? There we are. Open this and bring it over. Check this out. These are a lot of big tech tickers here. Apple, Microsoft, Google, Amazon, Nvidia, Berkshire Hathaway, the B shares, Meta, Tesla, Visa right here. Market cap in billions. Notice Nvidia right here, only coming in, it was in the $1 trillion club briefly. This is the market cap. Here's our revenue though. Substantially different numbers. Look, one of the big dogs in here, Amazon, ruling the day with $500 billion in revenue. Even crushing Apple up here. Now, their year-to-date change, Nvidia, growing quite heftily. I mean, we've all seen Nvidia growing. Meta also, this is stock year-to-date change. And Tesla up big. Big. Amazon coming in just a 50%, just a 50% gain. Now, things I've been harping on. Price to sales over here. Price to sales ratio. This is one of those key things right here. So sector average. NVIDIA coming in 30 times their sector average. Their price to sales, this was like yesterday, maybe the day before, 37.17 right here. I keep talking about it. 37 times price to sales. Price to sales. Let's talk about their revenue here. Their price, their market cap coming in 30 times, 37 times. All right, this is like, that's why it's red. It's dangerous. All right, that's coming in high. Ones that were high at the end of 22, Visa and NVIDIA. It's price to sales. So I would be looking at these ones with much, 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 much lower, like 1.7 times price to sales right there. A lot of people talk about P to E, price to earnings, P versus E. And I like to look at the sales because it doesn't matter what your costs are. How much money do you bring in the door? Amazon's only priced at 1.7. Well, it was 1.7. Now it's 2.47. 2.47. It's current. All right, Apple up there at 7, but NVIDIA at 37. And this is why I say be careful on NVIDIA. That is extremely dangerous numbers right there. 30 times the sector average that it plays in. All right, please be careful. Don't chase NVIDIA. That's the rule there. All right, moving on down through here. Carvana, nice pop, stuck in the roadmap line. It needs to stuck right. Oh, that's marginal lower high. If it can break it over that high, get above the roadmap line, this could see a return up into this area. Could. Do I think they're going to survive? I have no idea, but that doesn't mean that it can't do something crazy. SMTC, that one probably going to come up here and reach and fill this gap at the minimum. And then it has another gap right over here. If they're not going bankrupt, although losing money, I don't know. Oh, no, reported flat. Made a little money. Anyway, that one could come up, fill those gaps, test those areas. GER is up here. Nice. Nice pop. Nice, nice, nice. That's getting to extensions. Probably going to come back and retest the breakout. FDM. Let's make sure that wasn't any kind of split or anything. Dividend. Yeah, that's one of the ones we hold in double dip trades. That might be time to book some profit there. That is a crazy move for something that pays a 7% dividend. Might be time to book that one. All right. FDMT. I need to make a note to go look at that GER. Somebody remind me in Discord to look at GER for booking profit on double dip trades. FDMT, biotech, yikes. HCP, another ouch type of move. That can be all it needs. Right back to that support level. I mean, it's been support for a good long time here, and it can chop higher again. This is just choppy, nasty, gnarly stuff here. Potentially bottoming, but that was not continuation. That was not a higher high. This is not looking bullish on that move. Be careful. SMAR also getting smacked down right there. That can go lower. Get a deeper retrace on that one. We came up to the extension target. And now we're getting the retrace. How deep can she go? And come on down to this $35 area. Possibly even as low as 30 before we can find support. All right, bias for the day. BETO, it depends on which option you're talking about, Tim. I have lots of positions on BETO, lots of positions on. So if you're just referring to a call, I don't know which one are we talking about, which expiration, which time frame. Long term, I have long term calls out to 2025 on BETO. BITO. So bias for the day, we might spike and test that. We're still in this topping. I just expect topping. It's probably churn in this zone. If we start losing it, we can retrace deeper. Please be careful. All right, XLY, as you say, right there. If you're asking about an alert from a service, go ask in the service. This is not the place. I think you're referring to a service trade, so I'm not going to talk about that here. That's an alert service trade. This one, that's a 3-wave move. Right there, right there, right there. Could see a move on up to 170. This is definitely still below, well below these August highs, underperforming quite significantly. Still got opportunity to rally. I don't know. S&P is up near the August highs. NASDAQ up near the August highs. Yet our consumer discretionaries are still significantly under the August highs. Represents a 9% potential upside. Being a little volatile. I don't know. It is heavy in Tesla and Visa and TSLA, not TLSA. We're probably coming up to test this trend line. Then we'll probably get a pullback back into the roadmap line potentially. That would be a point. If we do another 618 type retrace right here, it's like a load the boat situation for long-term positions on Tesla. Because that's a potential 1-2-1-2 nested bullish setup, and we could blast off. Is it time to load the boat right now? No. Gotta wait. Gotta wait for this to finish on up here. I would love to see it test this 240, 250 area where the trend line is, get a retrace back to the roadmap line, possibly a little deeper, and then set it up to go. All right. If you want to keep chatting with me, Discord's the place. Kind of biased for topping today. NASDAQ can definitely roll on down. ES looks like it wants to reach up and touch that August high before it rolls on over. And Russell find a little resistance at that 618. It would not surprise me to see a pullback and build some more strength before it can break on through. All right. Like I said, continue the conversation in Discord. Links in the description if you want to come join us. It's like $5 for 3 months and like 20 more bucks for another 12 months. So we can get like 15 months for like $24, $23. I don't know. It's a crazy good deal. Plus, you get a watch list and setups and all sorts of stuff. Plus, you get to come chat with us. That's maybe the most valuable part. Anyway, make sure you subscribe. Make sure you hit the bell for notifications. And we'll see you again tomorrow. I'll come do this all over again. We'll talk about what's moving for the day. Remember, next week, lots of volatile events. Caution, caution, caution. The account you save may be your own.